All right, you guys, happy Wednesday, January 11th, you guys. I am pumped up about this session, but I'm just pumped up about the market, where we're at, about you guys, about growth, about contribution. And so if you are a guest here today, welcome to Keep It Moving Group Coaching. This is an environment where we share, we believe in the collective wisdom. Sometimes there's vulnerability, but there's high levels of value in this room. And I'm not saying that all that value comes from me. It's from all the people that are on the screen and then our guests. And I'm really excited to hear from Padi today. And so we'll get rolling in just a couple minutes. But before we get rolling, as always, in true fast form, I'm gonna have somebody bring us out on the field. Vanessa, she's ready to go. Her camera's on. So Vanessa Vo, I'm gonna go to you. I'm gonna have you bring the team out on the field like you do. We're going into battle. Vanessa, have you bring us out on the field.
Good morning, team. Happy, what's today? Wednesday. And we have the amazing Padi Goodspeed here. I was like, I'm tired, but I'm gonna get up. And I mean, those of us that's on here, we're here for a reason. So let's, tune in and let's see what, today's about and finish out our week strong and kill the weekend.
I love it. I love it. Appreciate you. Appreciate your contributions. Here's what I'd recommend that you guys do today is take notes. And what I want you to take from group coaching is I love it, Bria, is I want you to come to these and look at these as like small masterminds that you guys get to attend 3 times a week. You should be taking a note or two. And then what you guys do is based off of those notes is say, how can I turn that into a video? How can I recycle some of the information that I learned from these sessions or from the guest speakers and go and create something on my page that's going to live on and live on and live on? And it showcases that you're learning, that you're growing, and that you are an expert in the market. And so I have a couple questions for Padi this morning, but I want to make sure that everybody, and we're going to learn from Padi right now, we're going to hear from Padi, but I want to make sure that everybody is clear on what the conversations they're having with consumers are. Like, have you practiced that dialogue? Do you understand where we are in the market and how to truly, truly articulate this? I got a text message yesterday. It said, what's the best script that you're using right now in the market that's working for buyers? You guys have yours. We're going to learn from Padi today on how to really build that. But here's the sentiment around what should be said right now to consumers. This is what we call the closest to the bottom of the market that we have seen in a very, very long time. As a buyer right now, interest rates have gone up, but we have seen a slight adjustment downward recently. Why right now is still a great time to buy is for reasons that didn't exist a year ago. Seller credit, request for repairs, the ability to negotiate and to mitigate higher interest rates, buy down programs. But here's the caveat. As interest rates start to go down in the future, negotiations and seller credits will begin to diminish, especially in hot markets. So negotiate now, get credits while you can, and capitalize on these programs. And to quote Vanessa Vo, time in the market is better than timing the market. You guys, if you guys don't have a flow, an idea of where to go with consumers and share with them all the benefits of why they should still get in the market right now, write that out, practice with a homie, figure this out, because that's a dialogue that needs to be spot on right now. So Padi, I'm really, really stoked to talk to you today. Not only is Padi, one of our lender partners, but I feel that her and I have formed a great friendship. And I actually, you guys, I'm really excited about this. And I'm going to share before I turn the mic over. I actually got an invite for dinner at Padi's house. Now, I don't know if you don't follow Padi, there's her Instagram handle right on her picture. Is that your Instagram handle or is it your?
Yes, it is.
Okay, that's her Instagram handle. Not only is she a top lender in the country and mom, and we'll get into all that in a moment, but what she cooks leaves you like your mouth salivating. And so I was like, where's my invite? She's like, you just come through on a Sunday and I got you. So I'm going to take that as official invite. You guys heard it. You guys saw it. This is recorded for future reference. So let's get right into this, Padi. What I want to do is I want to do an update. I want to hear from you, but I also wanted to start out with some questions. And I wanted to have this almost like a podcast style. I wanted to get your opinions and I want to get your vantage point on a few things that are happening in the marketplace. Are you cool with that?
I'm cool with that. And can I just start by saying thank you so much for having me on the Keep It Moving Mixer, this coaching call. I'm really, really grateful to be here, Elias. Anytime I can synergize with you, my day gets better. And I mean that. You have the best energy in the game.
I appreciate you, and I take that as such a compliment coming from you and from anybody. That listen, I told a lot of people this, that I've been able to get far in my career because I had personality, I had energy, and I have grit. Right? Those things have been able to push me forward in life. So let me ask you a question. You obviously have stood out amongst hundreds and thousands of lenders throughout the country. I wanted to ask you just a couple, Brittany, mute yourself really quick. Let me get to Brittany. All right, thank you, Brittany. All right, so just to start out this conversation in a full stream of consciousness, I wanted to ask you, other than experience, which we'll get to in a moment, what separates you as a lender? Because here's what I see, is I see that you have this ability to keep it real. You have this ability to deliver information in a very easy way to digest. But if you were to articulate what truly separates you as a lender right now in our space, where at times lending could be a little bit boring. I see what Christina does. I see what you do. I see other people that we follow that have made this space a little bit more fun. So I wanted to ask you, what separates you as a lender right now in this marketplace?
Well, in this marketplace, I think as a whole, I'm doing the same things I've done forever. Like I think I've known Will and Chris for as long as I can, as long as I've been around in the Sacramento markets too, and they can attest to this and call me out if I'm lying. But I think I've always just been human. I've always had to juggle the work along with being, a single mother. I've been a single mother for a very long time. I'm always raising children. I'm always doing a lot. So my time is limited, and I'm always juggling a few things. So I think it's just being human, right? I think the one thing that you have, the one element that you can walk into every single room with and be able to relate to anyone that you ever meet is just being human. That has served me on social media and in real life. I'm a big person. Like I'm into music. I'm into poetry, and I was tweeting poetry. I was tweeting some of my favorite poets, and I landed a meeting with a gentleman who sold his digital company to Dropbox, and we sat down, and that was the first conversation I had about wanting to be $100 million producer. And I got insight about technology years ago that I would have never had access to had I not been tweeting my emotions, right? So I think the being human aspect of it is so important. We're all human. We're all going to make mistakes. I'm not the same person I was 10 years ago. I'm not the same person I was 2 years ago, right? So this constant evolution that we have and being okay with people seeing our flaws makes us stand out. I'm not on social media today and with I make every single post that I post, right? There's a couple exceptions with some, flyers and whatnot, but I make the posts. And I'm not saying that outsourcing is bad. It is efficient and smart. But when you interact with me, whether it's in person or online, you're getting a very real person, and you're getting a sense of who I actually am. And then I feel like that feeling lingers with folks. And when it comes to people and even who are clients, when you're like, I have a realtor who it took me a year just to get her attention. She's very high performing. They have a massive team, and it took forever to get her attention. And then when I actually got it, she was like, wow, you actually care about solving this problem for me? I can't get anyone on the phone. So it's always comes down to the human element and connecting with people, not because you've got the best products, not because you've got the best rates, not because you're the best realtor in the world, not because you have the most experience. It's simply because you're human. And I think that's served me in the past and really serves me well right now.
I absolutely love it. Like humanity at the highest level. Lisette and I had some text conversations earlier. I think I said exactly what Patty said, paraphrased in a text message earlier. So Patty, I absolutely love it. So wanted to ask your opinion on a couple things as we get started this morning. But first off, in regards to content, obviously you guys have heard it before. I feel like Kenny and I don't want to say this, build content any longer, but it's going to probably come up in our vernacular. You have over 13,000 followers on Instagram. How long have you been at it? How have you grown on Instagram? Was it part of being human and kind of documenting your journey? Like, how did you get to that level? Because I'm sure there's so many people on this call that want to get to that 10,000 plus follower level. How did you get there?
Cool. So, I've always been really shy. A lot of people know I have lots of insecurities about the way I look, about coming on camera and all those things. And so I actually had a very low follower count. I had like 15 to 1600 followers going into 2020. So 1500, yeah, like less than 2000 followers going into 2020. What really changed for me was when this app came on it's called Clubhouse, and you might still be aware of Clubhouse. So when Clubhouse started, I got an invitation early on, and we started having, there was lots of real estate rooms in there. And I was timid to raise my hand and speak. And what happened was I started hearing a lot of bullshit. And it's the same thing I see when I see a lot of people posting content, which I'll talk about. And I'm like, you're posting content that's completely wrong. And it's generating 10,000 likes and lots of interactions. And I'm sitting here thinking, oh my God, all you have to do is be confident enough to present a bunch of inaccurate information. It's the confidence makes a difference. So I really encouraged myself to raise my hand in those rooms and speak. And I started just rebuttaling some of the things I heard, or if someone said something incorrectly, I would gently correct them. And I was quickly recognized as an expert and brought onto every single stage every time I stepped into a room. And so and here's the thing I want you guys to know. Before that experience, I didn't even know how much I know. I never was in a situation where I had to speak about it. I wasn't in a content pumping mindset, right? I had no fucking clue. I was actually shy. And every single time I spoke, I would shake nervously. There's been events that you guys have asked me to speak at, and I'm literally shaking to the point where I'm sweating and uncomfortable because I'm not comfortable in that space. So, but it was kind of like, it brought me out of my shell. And so it forced me to say, there's a space for you here, and you need to speak because people need to know what you know. So it was a process of self-discovery for me to be like, oh shit, okay, I do know what I'm talking about so many things. So as I was brought onto more and more stages and I networked with a bunch of incredible people, you're talking about people that are managing billions of dollars worth of real estate that started with a $100,000 duplex in Bakersfield, right? I mean, the network that I have now is unbelievable. As a result of Clubhouse, I was able to network and do amazing events with Terrence Murphy in Texas. And that's how I met some other crazy team leaders in EXP, including Veronica Figueroa and other people that would hear me and say, hey, if you can say something that triggers me as a seasoned agent, then you have a lot to give this community and you need to keep speaking. And that kept going. So it was a very timid person coming out of my shell speaking. And then at Clubhouse at the time, there was no ability to communicate on the app directly. So you had to go to Instagram to DM people. So it blew up my Instagram following. And then, so then that died down as Clubhouse died down. So my growth started to die down. And then of course, Reels started becoming popular. I think I just posted Reels. And once I realized that the Reels get so many more views than a post, just like how the view count on Twitter is now showing you how many people actually see what you're doing, but they're not interacting with it. Now, I knew that before because I would run into people and they knew everything about my life, but they never said shit to me on social media, right? Like they weren't liking, they weren't commenting, but they knew everything. So I always knew more people were watching than interacting. But once I saw that, then I started posting more Reels. And I think that I've gained more than 500 or 600 followers over the last 2 months because of the Reels. So, and here's the thing about being human, right? Like you're not just a robotic real estate agent, right? I'm not just I'm a educator now. I'm a real estate investor. I own lots of properties. I'm a flipper. I flip properties. There's a lot of things that I do. So I'm not here to tell you that I am the one thing. And I think it's okay to be human. My friends were making fun of me over the weekend because they're like, what are you, a cook or a mortgage person? And I'm like, you know what? I like to cook. And you're going to know that. And the way I think about it now and how I'm going to start phrasing it is when you interact with me, you're going to realize how good it feels to be home. Everything feels better at home. So my message is all about home. I love being at home with my daughters. That's where I get the most quality time with them. I love being in the kitchen. Do you know how much better the food tastes when you're cooking that shit in the home that you own? So that's the mentality. That's the message, right? And so I'm putting that out there, connecting and so on. So again, finding something that I love, that I'm passionate about, that could be something different for everyone on the call, and then just talking about it. And luckily I do enjoy the process, so the pictures look nice as well. That matters. Just like how a home that looks nice and is properly staged is definitely going to get more traffic and more offers than otherwise, right? So I make sure that everything I post looks really, really good.
I absolutely love that, what you just said about, say it one more time, the tagline.
Everything for the home, everything feels better at home.
Ooh, so Roma, Rhea, and Judith, that whole section, I want to take that and I want to capture that as a video, but I absolutely love it. And before we get into the market update, I had a question that obviously reading, looking at the news, and I wanted to get what your opinion was on what's happening with Wells Fargo and why Wells Fargo is choosing to get out of the mortgage game. Now, obviously, they went under tons and tons of scrutiny years ago because of the way that they, I guess, gave out loans and processed loans through the recession. And so obviously they've always had a dark cloud over them, but now they're choosing to completely get out of that space. Just wanted to hear your opinion from your vantage point, and then we'll get right into doing a high level update on the market. But what's your opinion on what's happening with Wells Fargo?
Yeah. So Wells Fargo, man, they're always in the news, right? So Wells Fargo did in 2016 have scandals with how they've handled loan servicing across different sectors. If you have ever been on if you've been on my webinars and you're on my email updates, you know that I've talked specifically about why the high rate environment was not sustainable because of loan servicing. This matters in this answer for Wells Fargo. Loan servicing is a revenue driving vehicle for mortgage companies and corporations. Loan servicing means that if Bria buys a house with me today and she gets funded through my current for my current company, that doesn't mean that Cross Country Mortgage is going to be sending her a monthly bill. That monthly bill could be coming from Wells Fargo, Chase, Flagstar, Nation Star, whatever the company's name is, right? So the mortgage servicing is actually the entity that processes the payments, pays out the escrows and collects payments and sends out late notices, et cetera. So loan servicing is not a lucrative business in an environment where everyone's going to refinance. So if you're telling everyone, marry the property and date the rate, what you're expecting, what all of us are expecting, is that people that bought a home between September 2022 and let's say March 2023 are going to want to refinance within 12 to 18 months. When you cut service revenue and you say that I'm going to make a loan today that someone's going to have for less than a year, I'm losing revenue. So Wells Fargo is looking at their massive payouts. They've paid almost $100 million out to disgruntled employees that were robbed of vacation pay, wage earnings, et cetera. They have a $100 million lawsuit there. They have almost $5 billion of other penalties and payouts that they have to pay out because of other major mistakes that they've made in the business, right? That has to do, so if you're the CEO of a company and you're like, okay, we're bleeding, mortgage applications are down by 44% in the purchase sector. Where do we need to cut our losses? And this is very common for large banks to come in and out of the correspondent lending space. So let's talk about that. Wells Fargo is not getting out of the mortgage game. Wells Fargo is cutting what they are, their loan servicing portfolio. And by cutting their correspondent lending line, and I'll explain what that means, they're basically saying we're taking in less loans. So you have three different types of lending entities, right? You have brokers, banks, and mortgage bankers. Mortgage bankers are right in the middle. So brokers, people like brokers because, in my opinion, when you broker a loan, you're like hiring a DoorDash or you're hiring an Instacart to go out and do your shopping for you. Now, you know good and damn well when you go to the store, you're going to pick a better avocado than the Instacart guy, right? So it does, and that Instacart guy might be in a rush and he's making choices in that store that might be better for him than they are for you. And that's the risk that you always take when you're brokering, right? So it doesn't mean that brokers don't have great rates. That's usually the incentive. They're a little bit better in rate, a little bit better in pricing, so people gravitate towards them. But essentially, you're relinquishing your ability to select a lender, and you're giving that to a loan officer that's going to go out and shop at different banks for you, right? So then you have also the banking world, which is your Wells Fargo, your Citibank, your Chase Bank, your Bank of Americas, that most agents don't like to work with because they're not efficient. Most buyers have poor experiences because the front end person is not a decision maker. They're just an app taker, and everything that's important happens after they get into contract, which is why it creates so many problems and less likelihood for success. But it's funded and done in one loan. So that means that if Will comes in to Bank of America and says, I have a loan, I'm getting a mortgage here and I have a checking account here, he gets some incentive. So that's why they retain those customers. Then you have the mortgage bankers. The mortgage bankers in the middle, like myself, we work for direct mortgage companies that fund loans directly with their own money, but they sell the servicing to a company like Wells Fargo because we don't service or hold the loans. So Wells Fargo is saying, I'm no longer buying loans from lenders that are mortgage banks. We're not going to buy those loans anymore. We're taking our products off the table. That's what correspondent lending is. So a correspondent mortgage anyone that says I'm a direct mortgage lender is a correspondent lender, and they are giving you products from Wells Fargo, Bank of America, or whoever agrees to allow them to carry those loans, and then they sell the loans to Wells Fargo to do the servicing, which is collect the payments. There's no money in that game right now because the servicing revenue is going to get, is going to be much less in the near future, because when you get a loan today, you're expecting to refinance within 12 months. But if you have a 2% or 3% interest rate, you're keeping that loan for a long time. And that servicing revenue is actually going to be more lucrative. So that's really it. If you have a lot of scandal, you're paying out a large amount of money to your employees, about 100, it's like $95.7 million that's going out to their employees, that 5,000 employees that filed a lawsuit against Wells Fargo. And then you have over $4 billion and penalties and fees and settlements and lawsuits that are being paid out. So what are they doing now? Hey, we got to do something because revenue is down. We've got to make some cuts. We've got to lay off more people. And we also have to work on our image. So they've created a fund where they are committing $100 million back into the community for equity and home ownership. And that might come in the form of a grant. It might come in the form of donations that they give to local charities. But Wells Fargo is always in the forefront of the news and trying to repair their image. But they've been in the news for more than 7 years for nothing but scandals, which also kind of begs the question of, we're quick to cancel culture is rampant, but why are we never canceling big banks for the constant fraud that they're committing across various sectors? And we only talk about this, we want to give the business to the banks and our clients, and we have these relationships with large banks, and I don't mean to offend anyone if they represent those banks, but they're riddled with constant scandal, and they're not always looking out for the best interest of the client, and they don't care about the process because the front end people don't value or don't have the decision-making capability nor the training to make sure a client is successful from point A to point B. So that's why Wells Fargo is getting out of the game. They need to save money and they need to save face, and that just means they're getting out of the correspondent business. So if we're just not going to have Wells Fargo products to sell in the near future. And one last note on that, when big banks come in and out of the correspondent game, it's extremely normal for that to happen during times like this. In 2007 and 8, lots of big banks came out of the correspondent game. They come in and out of that game depending on how much they want to impact their own revenue and what revenue streams make sense for them at that time.
Wow. Well, I'm really glad that I asked you this question. I hit her around 7 o'clock this morning. I'm like, hey, you cool with me asking this question? She's like, yeah, absolutely. So I love this. Let's switch gears. We have 107, 106, 107, someone in the waiting room, salespeople on this call right now. And I think what's important for our team members, as well as guests that are on the line today, is understanding like the dialogue that they should be having with consumers right now. Like, what are the best ways for them to educate? And I wrote here, from a sales and knowledge dialogue with consumers, how would you recommend that we frame our conversations right now to best educate consumers? So we'd love to hear your high level view on that, interest rates, so on and so forth, so we can really define and refine our dialogue when we're speaking with our consumers.
Mm-hmm. Absolutely. So I wanted to highlight that again, I don't mean this to plug myself at all, but if you've been on my webinar, you know, very early on last year when we started having these conversations, I made the comment multiple times that we have a very short window of opportunity to take advantage of what's happening in the market now. So all your conversations should start with that. So Elias is the buyer. He's on the line. He says to me, I'm very concerned about what's going to be happening with market prices. I'm very concerned with home prices. Elias, I am grateful that you are aware of what's going on. I have a lot of conversations every day and people are not fully aware of what's happening. I'm grateful that you are aware of what's going on. We have a very short window of opportunity to take advantage of what's happening with home prices right now. And here's why. That window of opportunity, however you want to phrase that, is extremely important. And here's why. Okay, so as we've talked about, we have inflation is up. And when inflation goes up, everything goes up, right? So interest rates are up. We know that, I've said this before, early December, that the conversation is going to shift from interest rates to home prices. So now people are not telling you, oh, the rate. They're telling you, oh my God, how much lower can the prices go? What's going to happen to the prices? So these are the concerns that we need to address in the market today. Every single person is feeling that. So across the nation, across the entire country, the average change in price from peak levels is about 2.4%. So in certain pockets in the Bay Area, very specifically San Francisco, where in the peak market you had the home prices go up over 40%. Now that's adjusted and it's more like 28%. So you have a 10 to 12% adjustment. Okay, let's talk about another talking point. Something that I think would make you stand out against your competition significantly is going to be Elias, I don't think many people understand the difference between the market value, the appraised value, and what someone is willing to pay for the property. The reason why home prices were skyrocketing was because when the property was listed for $550,000 and there was 7 offers on the table, when Bria came to place an offer, she offered $10,000 above the ask price and above the list price and above the appraised value to guarantee that she can knock Will, Patty, and Elias out of the equation and win the bid. This is called a premium. When you're willing to pay a premium for something, that's because there's not enough of those things on the market. So what I'd like to share with you is that we have a very tight inventory problem. We have very tight inventory conditions. So what happened in this part of the year is that demand was destructed. There are less people that are out there offering on the same amount of inventory that existed last year, for example, right? Whatever those inventory numbers are. So you have a short window of opportunity to place the offer on your terms. We've discussed that plenty of times. So here's why. Now the client is very analytical. They didn't buy that. They want more information. Here's more information. And you can Google this and study it. There's a Harvard study that has been done in regards to housing over the last 6 recessions since 1980. Since 1980, in every single recession, only 5 out of the 6 recessions had a dip in home prices, and the average change to home prices was a decrease of 5%. So home prices went down on average 5% over the last 6 recessions since 1980. Now, let me ask you something. Every single one of you in any market that you're in, if you could have, do you wish that you bought a house in 1980 that you still own today? Through multiple recessions? Absolutely you do. If you bought 5 houses in whatever neighborhood you live in 1980 and you still had them today, you would not be on this call. You would have found somewhere with sunshine to be waking up to this morning, right? So I'm here to tell you that over all of the recessions, if you take a look at housing, you see that the dip is always much shorter than the upside. So let's talk about the average time frame of a recession. Over those 6 recessions, they've lasted an average of 6 months each. So if you've been in this business for 2 years, 6 months is a small fragment of that 2-year period. If you've been in for 5 or 10 or 20 like me, 6 months here and there are dips that we expect in the business. So when you're talking to a client and you say, I understand your concern. I am so glad that you're aware of this. We have a short window of opportunity to take advantage of placing offers and winning the bid on your term. Since 1980, on average, recessions last 6 months, and the average reduction to home values has been 5%. So here's what happens when you buy at a discount. If you bought this home today for $575,000 and the comparable sales over the next month, set over the next 12 months, showed that your home value was $550. But in 2024 and 2025, that property value went up to $600 or $625. Mr. or Mrs. Buyer, are you winning? Absolutely. You have to be able to take people out of the emotions of fear and doubt and into the math. The math and the facts and the stats are simple. So have you ever heard for your business when people say, you don't know how to run a business if you don't know your numbers? If you're not measuring your lead sources, measuring the amount of money you spend and how much is coming back, measuring the amount of calls that you're making and getting that back, if you're not measuring that, you have no idea how to improve your business. And that's the exact truth, because with data tells a story. That's why data is considered like currency. That's why AI companies are going through the roof, because they're going to collect data. Data is important. So when you're able to have a conversation with someone with real estate, which is always highly emotional, and you're able to balance that with data, you win the conversation. The talking points are simple. They're not sales tactics. They're very simple. The window of opportunity that we have to take advantage of this market is much shorter than the upside. This should be a long-term decision. And by long-term, I would like to see that you want to be in this house for a minimum of 3 years and ideally 5 years. What is the criteria for the home? What are the non-negotiables for the home that you can live in for the next minimum of 3 years or 5 years? It needs to have at least 2 bedrooms. It needs to have a space for your dog, right? What are those questions? You go right into the dialogue. When someone gives me a reason why they don't want to do it or what their fears and hesitation is, I address that directly, and then I go right to the questions that are on the application so I can continue to collect information and get them approved. On the consultation call, I can ask 5 questions and tell them exactly how much they're going to be approved for, which is what people want to know. They don't want to know that they don't really care much about the data, but they want to know that they're making a good decision. And the only way to shift the focus from the emotion to the decision-making process is to go from fear and doubt to, oh, okay, I'm making a smart decision. Because people that buy in a downturn buy low, sell high. Buy low, sell high. When people are fearful, be greedy. When people are greedy, that's when you should be fearful. These are quotes that you guys can continuously use that I think about every day. And these are actually things that I live by. So when I deliver this message to you, it's not a sales pitch. You feel in my energy and in my delivery that I believe what I'm saying. And I also have the luxury of saying, I am currently buying in this market. I would not advise you to do something that I'm not doing. Right? Or things like, my reputation is extremely important to me, because without my ability to share information with you and guide you through this process with integrity, my family doesn't eat. These are ways that I reiterate in my conversations why what I'm saying to them is something that's heartfelt and real and honest. So back to the data and back to the talking points. When you're talking, I would love to have anyone throw out in the chat some sort of rebuttal that they're getting that I can respond to that would be more common on your side of the business. I'm seeing generally people are either worried about interest rates, or they're worried about interest rates, or they're worried about home prices. Now, I have to tell you something. When people talk to me about interest rates and they talk about refinancing, the whole marry the property, date the rate thing, something that I say that's different is I'll say, Elias, if you refinance, that's a benefit for me. I get to do 2 transactions for you. But what I want you to understand is that refinancing isn't necessarily going to be as easy as it sounds. It only makes sense if your interest rate is going down by a full percentage. And again, you plan on keeping that loan for the long term, because usually the benefit of a refinance takes about 60 months. Now, listen, who cares about what I just said? It just sounds different than what every other person has told them, because they're shoving down the idea of refinancing down their throat. And all I took was an extra 30 seconds to make sure that make sure they knew that I had their best interest at heart. Aaliyah, worried about job loss. Very good point. And that's going to come up in our market update, but I'm going to explain that job loss fear is a very, very real problem, because the Federal Reserve is not expecting, the job market has been extremely resilient. We went from a 3.7% unemployment rate down to 3.5, which means that more people were working in December 22 than they were the month or so before that. But one of the caveats in that report was that a lot of those jobs were part-time and seasonal employment. So people are going out there in the gig economy and getting new jobs or getting second jobs and that sort of thing. Now, why Aaliyah's question is so important is that the average American has lost over 1 hour a week in their work, right? So if you're working a normal 40-hour week, and on average across the board, people have lost one of those hours, what do you think that means for people that are owning bonus, overtime, and commission? So even if you're not worried about losing your job, there's significant data that suggests that people will make a lot less money in 2023, and every single one of us on that call are already feeling that. So job loss concerns and for worries about a job is going to be another one of the big things that you're going to hear. So you can't rebuttal that, right? So if I'm talking to Will's a buyer and he's telling me I'm worried about my job, I'm going to lose my job. And I'm going to say, okay, why are you worried? We're going to talk through the dialogue of, okay, let's explain that. Is it that there's layoffs happening? Is it that you just got the job 6 months ago? Are you a recent grad? Was there any conversations had? Was there any notifications given? And you kind of just talk them through it and be there and say, you know what? I understand that. And I'm pretty sure you're going to be able to get back on your feet very soon if you are facing a possible layoff at this time. This is normal cycles in the economy, and I'm feeling it too. I'm feeling it too. I'm self-employed, so no one can fire me, but there's much less income coming in at this time because the transactions have decreased in real estate. So we're on the same boat. Again, be human, level with that person. They're worried about losing a job and you're on the phone with your employer because that client is going to write your paycheck if they buy with you. So you have the same exact fears and concerns. What would you want someone to say to you in a situation like that? You don't want them to sell you something. You want them to understand that you need to take a break and reassess your situation. So those are the moments where you get to really establish how much you care, be a human being, stay in touch with them, check on them, and then guess what? Who they're going to call the moment they get a full-time job or they feel more stable about the job that they're in.
Yeah, I absolutely love that. There was another question in here, or a remark. It takes 60 months to realize the benefits of a refi. Really with a question mark, even though your payment goes down. Can you elaborate on that?
Of course I can. Let me grab my calculator. Okay. So let's say that you're refinancing. Okay. When you refinance, that's such a good question because that's exactly how refinances are sold. We're always selling people on the monthly payment savings. The average savings that you're going to have, let's say that the average loan amount in our community here of the people on this call is, let's say, 700,000. Okay. So the average amount of money you're going to save on a refinance, lowering your interest rate by 1%, let's say at best is $150. So if it costs you $5,000 to refinance, now you're going to say, oh no, but that lender said there's no cost. That lender said there's no fees. That lender's full of shit. Let me tell you why. Anytime you refinance, you're going to have costs. And if there is a no cost loan and 100% of the closing costs are covered, it's because the rate was increased to cover that cost. There is no such thing as a no cost loan. So there won't be lender fees. So the lender might waive some fees for you and keep the interest rates at market, but you still have to go through a title company. So let's say at best, the closing costs are $3,500. So $3,500 divided by 150 is 23 months. In that case, if the client is only paying title and escrow fees and the sum of those fees for the entire refinance is $3,500, then they're going to recuperate the cost of the refinance in 23 to 24 months. So if the cost of their refinance is higher, which it most likely will be, I can tell you I've done this for 20 years. So if you have a $5,500 cost to refinance and you divide that by 150 months of saving, now you're at 3 years. It's going to take 3 years to break even. So the higher your loan amount, the higher the cost is, and the longer the break even point is. So this is another point that helps you remain as at the forefront of their minds as someone who's honest and transparent. When you say things, you might say, well, the other guy didn't say it, so they're going to go talk to the other guy. Well, by the time they get to the paperwork with the other guy, they're going to realize that you were right, and they're not going to like the fact that they were bamboozled about something, right? So what does that mean? That means that when you marry the house and you date the rate, remember, don't you forget to hold your loan officer accountable to tell you the cost benefit analysis of a refinance so that you're properly planning. This is exactly why I've told people to go and get the seller credit, but don't apply it to buy down the rate. Because when you buy down the rate, again, let's say the average savings is $150 a month, but you had a $12,000 seller credit and you're going to be refinancing in 12 months, 12 to 18 months. $12,000 savings over 18 months is over $660 a month. Which is better? If I put $12,000 in your checking account that you could manage over the next 12 to 18 months, averaging savings of over $600, or if you paid it to the bank, reduced your payment by $150 and refinanced down the line and lost that money because you don't get it back. So we want to teach people how to keep money in their pockets. And when we're talking about a refinance, you guys should say, don't forget to hold your loan officer accountable to showing you the cost benefit analysis of a refinance. We're telling people to buy now and refinance later as if that process is as simple as it seems, especially if home values do go down below what their purchase price is today. So if someone buys the property for $750,000 and they put 3.5% down on that property and they took an FHA loan, half of their down payment was eaten up by the upfront mortgage insurance fee. They want to come refinance because in 3 months they heard the interest rates went down. But guess what? Along with the recession and the interest rates and inflation going down, your property value is now appraising for $735. You can't refinance. So now there are other things for FHA loans and streamlines and some that don't require an appraisal, but that's an example I'm giving you. So these are the things that you say that make you just sound like, hey, I'm looking out for you. Don't forget to ask this question. You're giving people that information so that they know that it's not just salesy, right? So yes, you have to do a cost benefit analysis. You take all the cost of the refinance, all the closing costs that gets added to the loan, you divide it by the monthly savings. And another thing to factor in is that if you've been making payments on your home loan for 24 months and you refinance, the 24 months of principal that you paid starts over.
Wow, incredible. Skylar, does that address your comment in the chat? Cool, awesome. You guys, we have time for 2 more. Who wants to share a rebuttal or share a thought or ask a question to Patty before we move on? Anybody else? Going once? Well, damn.
Quick elaboration. You said what would be better? I understand give the bank 12,000 and take the time to pay it to realize that gain back. I get that. What was the first thing you said? Or if I gave you 12,000?
Yeah, so good question. So when I was making the correlation to the current state, well, the last few months, it's been very popular to talk about the buy downs, right? So as a realtor, I want you to go and negotiate a seller credit for me. Let's say that seller credit is $12,000. The $12,000 seller credit. Now I'm advising you as a loan officer when I'm doing the math with the people, I'm saying if you spent $8,000 or $10,000 or $12,000 to buy down the interest rate and you save yourself $150 a month, I'm telling you that the market is going to improve and interest rates will be lower within the next 12 to 18 months. So if you refinance in the next 12 to 18 months, you're going to lose the money that you paid for the rate buy down. So I would like for you to take the $12,000 credit, apply it towards your closing costs. And as a result, you're going to have an additional $12,000 in your checking account. During a recession, that's going to come in handy. So you have that cushion. If you take that $12,000 and you divide it over the next 12 to 18 months, you're saving on average $650 a month. If you manage the money yourself, instead of putting it in a 3-2-1 temporary buy down or a permanent buy down. Take the seller credit, apply it towards the closing costs, and keep it in your pocket. You're going to need that money. And it gives you the flexibility, because if they couldn't afford the payment that they were getting with the current interest rate that was being offered, then they wouldn't have qualified for the loan, right? And if I'm telling them to apply $12,000 towards a rate buy down, instead of applying that money towards the closing costs and keeping an additional $12,000 in their pocket, I'm showing them how they can have an extra $650 a month instead. It's a way to manage the money differently.
Love it.
Awesome. Thanks so much, Patty.
Yeah, you're welcome.
So let's go to 2 more really quick. Let's go to this first one. And Nias, this is always posted directly after the session. You can find it on our YouTube channel, and I'll make sure that if you don't know where to find that, I will direct you to Christina asks, how do you handle payment shock when a client doesn't want to move forward due to the monthly payment / comfortability?
A payment shock refers to the way that people are, like, for example, I talked to someone yesterday who's paying $1,500 a month for rent, and their mortgage payment is going to be $3,200. That's what payment shock means. So typically people who are paying really low rent amounts know that their time is coming at some point, right? So your rent prices go up on average 6% per year. So unless they're living with parents, they're going to experience constant increases to rent. And at some point, it becomes uncomfortable because you want to paint a wall or add a nursery or whatever you want to do, right? So when it comes to payment shock, it's like with anyone that runs into a shock, like finding out your boyfriend cheated on you, or like taking a bite of something that was spicier than you thought. You got to just take a moment, breathe, breathe and figure it out and say, this is the reality of home ownership. And this is exactly what it's going to take for you to switch your mindset from being a renter to being a homeowner. And the cost is higher. In addition to the payment, you're going to have to cover the expenses if your water heater broke. You can't call the landlord. So typically when someone has a huge response that is a negative response to the payment shock, I kind of add to that a little bit because I want them to understand that you're making a decision to become a homeowner. There are benefits of home ownership that will follow you for the rest of your life and could potentially be life-changing. And for many of us, it's the only way that we have to build any sort of generational wealth, unless you have some big legacy being transferred down to you through an inheritance. So this is uncomfortable, and get comfortable with the uncomfortable because that's what it takes to be successful in this process. Honesty. In every single rebuttal, honesty also stands out more than anything else. So when someone shows you a fear of something or a reaction to something, you validate that fear and validate that reaction, and then shift the mind and shift the focus into the benefit. That's what you're doing. If you're not a homeowner, I'm sure as a realtor, you also want to be a homeowner. So you have the exact same fears: the payment, the commitment of the payment, the down payment, the long-term commitment of the mortgage, about which house should I buy? Where should I buy? How's my commute going to change? You have the exact same questions that any buyer would have. And what you would want is someone to be brutally honest with you about what you're doing, and so that you would want to trust them for the long term of your career as an owner.
God, I love this. So Patty, you had said something earlier. I just want to make sure I wrote it down. And for the people that are on this call, everything on this call is transcribed. Everything, obviously, this is recorded. So if you want a copy of the transcription, Judith can get that to you. Every single meeting is recorded. That way you can go back and watch it. Also, look at the transcriptions. But you had said something earlier. It says we have a very short window of opportunity, and then there was an upside piece to that. Can you just continue that or say that phrase again? Because I think it's a really good hook for an opening of a video.
Yes, of course. So when we talk to our clients, we are constantly reiterating that we have a very short window of opportunity to place offers on our own terms and buy real estate at a discount. Because over the last 6 recessions, the average recession has lasted 6 months, and the average decline in price has been 5%. So if you can imagine, if you have a 6-month to a 1-year downturn in real estate and home prices are impacted and you're able to purchase at a discount, I can tell you that the upside will be far greater than the downturn. How do I know that? Because I've been doing real estate for 20 years. And I remember distinctly when the market crashed in 2007 and 8. And since 2009 up until 2022, prices have consistently gone up. So I can tell you with certainty and conviction that the time period between 2009 and 2022 is much longer than the end of 2022 through 2024 for a downturn. So do you see what I mean? The downturn is much shorter than the upturn in real estate. You have to remember that when you're buying. Also, when you're buying real estate, the most important position to put yourself in mentally is to buy within your means. In the heat of the market, in the peak of the market, I still bought a property I was able to negotiate an $80,000 discount on. The mind frame that you learn and you take on during a recessionary period is the exact mind frame that you'll continue to carry with yourself through the rest of your career. That's what we did. Those of us that went through I started in 2002. We went through the 2005, 6, 7, 8, 9 era. We knew that real estate would be cyclical. We knew that a downturn would be coming. So what you're learning in this recessionary period is so valuable to your business. Anytime you see the market heating up to the point of unrealistic expectations from both buyers and sellers, where the competition is completely unmanageable and what's happening to prices is unsustainable, you will see that as a red flag, not as an opportunity for money to continue falling from the trees.
God, I absolutely love it. I could rap with you all day long, Patty, you know that. But I want you guys to feel and understand what's happening here. When Patty speaks, you understand that she is an expert. You understand that she knows her research. She understands the market. She knows the dialogue. She also is super empathetic and can feel what another person is feeling, and then being able to address it in a way and to reframe a mindset of a consumer by sharing with them what can potentially happen and taking them down a different path. There's so much power in this conversation. Now, some of you say it's fast, and it is fast. We have a very short time frame. However, this is your opportunity to say, you know what, how much am I actually studying what's happening in the market? How am I taking pieces from her and other lenders that I hear from? And how am I making sure that I can fit this into a conversation, a flow, and understand no matter what a consumer tells me, I'm going to have a way to address that, to have empathy, and to be able to reframe the conversation. So much power in this, because not once was she shaking. She was actually giving you rebuttals, and I want to hear them, and I want to share with you how to overcome these things when you're speaking to consumers. So much power in the things that she's saying. So I want you guys to practice and continue to practice and continue to practice and make this, it's constant, right? This is evergreen. Your practice of your dialogue, your flow is always going to be a part of everything that you do. We're practicing our scripts, we're practicing this. How well are you articulating what's happening in the market? So Patty, I love it. Let's do this. I want to hear 3 people, key takeaways from our time together today. We'll go to Ernesto, we'll go Bria, and then we will go to.
Can I just say one thing? I just want one thing. We didn't really get into a market update, which is perfectly fine. I will have them on my Instagram, but I want you guys to know that tomorrow there's a big CPI report, and here's what I want you to pay attention to. So if you're going to go out and make content today, this is what you say. There's a CPI report due tomorrow. Core inflation was at 6%. If core inflation comes in at 5.7% or 5.6%, we're going to have a rally in the bond market, and mortgage rates can improve. Let's stay tuned for more information. I'll have more for you tomorrow. So remember, the CPI report is due out tomorrow. This is going to be a big deal. So if that number comes in below 6%, you're going to expect another rate dip. And if that happens, you're going to see an uptick in mortgage applications and more lead flow. I know all of you are noticing that there's less lead flow, and that might be picking up soon. So remember, if you're going to make content today, tomorrow, guess what we can expect? CPI report. It came in at 6% last time. If it comes in lower than 5.7%, you're going to see an improvement to interest rates. Pay attention to me. I'll have the news tomorrow. Boom.
Woo! I love it. Ernesto, key takeaways from our time together today, and then Bria, will go to you next.
Yeah, for me, there's 3. I always enjoy listening to Patty because you can't disagree with math, and you can't disagree with facts. And she said, data tells the story, which is something that I say a lot of. I totally believe that as well. So understanding how to interpret market data is critical, for one. So like, even I had not a rebuttal, but I was trying to understand why Patty was saying, don't take the credit and apply it towards the buy down. I'm like, why would you not? And it wasn't until she broke it down that I was like, okay, that makes sense. And you're just giving your client another option. Ultimately, it's for them to decide, but you're presenting the actual facts. Secondly, from a personal development perspective, Patty just admitted that she was very nervous doing this. It was 2 years ago that she was terrified to speak in front of people, and she gets nervous. And it was through putting herself in uncomfortable situations and practicing over and over again. And even for me, like 2-3 years ago, I could never show up on a call and speak this way. So for anyone who's like, oh, I could never speak like Patty's incredible at public speaking. And it was not long ago that she wasn't that good at it. And for her to be transparent enough to admit that is a huge personal development lesson for all of us. And lastly, I think Patty is just superhuman, and she's not telling you what you want to hear. And she said something at the beginning of the call that I totally agree with. There's a lot of people, realtors and lenders, that are spewing a lot of bullshit, and you want to get attention. And I get that. But eventually, as Elias has been posting recently, the truth will set you free. And when some of these things that you're saying turn out to be untrue, you're going to feel a little, I think, uncomfortable with yourself for saying those things. So it's better to really understand how this all works rather than just regurgitating what other people saying on social media. Like in 2022, how many people were saying marry the house, date the rate? Now we're seeing that that's not the best strategy for most people, because you don't actually understand how that works, but it sounded cool to resonate at that time. So always enjoy being in the same room as Patty, whether it's face-to-face or virtual.
Thank you.
So love your takeaways. You guys, I'd love to go to more. However, we're right at our time, and I want to respect everybody's time, and I have a meeting right after this. But I want you guys can go to jointeamfast.com. You'll have all of our past meetings. You'll have the YouTube channel there for all of our recordings. This recording should be up within the next couple hours, transcriptions as well. So what I want you to do is go back, watch the video, stop the video, work on your dialogue, because I think that there were some powerful, powerful moments. She gave you a couple hooks if you're going to go create the video, but you have to have some substance after that hook. And so, Patty, full stream of consciousness. I always love you, appreciate you, and really, really respect what you do in our industry and how you give back to everybody. So you guys, hopefully you found this helpful. Now, the challenge is for everybody is to take some action from what you heard today. Whether this is an email you compose, whether this is a blog that you write, or whether it's a video that you create, or whether it is you go back into your database and say, okay, now I have some fresh ideas, some fresh notes, and I have some different direction I could take my consumers and make this a conversation that you have and set aside the time. So you guys, you're going to choose to either take the action or you won't. And it's just like going to a seminar. You took some great notes and you go home, you don't do shit with your notes. Go out there and apply one thing that you heard today and show Patty and show us your receipts. That's the best thing that you could do for yourself and for your business right now. So you guys, I appreciate you. Patty, thank you from the bottom of my heart. And as always, you guys keep it moving towards your dreams, goals, and vision. And I will see you on Monday. Group coaching is canceled on Friday to reflect, focus, and fire mastermind in person. So have a wonderful, wonderful day. Patty, much love to you.
Take care, everybody.
Before you hang up, Elias, before you hang up, are you going to do Monday being a holiday?
Correct. Yes.
Okay.